And begin. Good morning to all of you. And on behalf of the Spanish Chamber of Commerce in the UK, I'd like to give you a warm welcome to this morning's webinar. As you know, it's about letters of credit as a means of payment for international transactions, for international trade, especially in countries with some risk or low backup. This is the field Synergy in Trade is expert in. So let me explain a little bit more about Synergy in Trade, and then we'll go through the bios of the speakers, and then we'll go directly to the presentation. So Synergy in Trade is a trade finance company established in 2006 with departments in the UK and Spain. Experts in the field of letters of credit, their main function is to produce shipping documents under letters of credit and present to the bank for payment, as well as financing solutions for imports and exports. The company was founded in 2006 by David Slinger and Cassandra McAlpin, who are co-directors, and has grown over the years to employ a team of staff that have many, many years of experience in the trade finance. We are thrilled to be collaborating with them to deliver today's webinar. We have three speakers with us today. The first one will be Ian Wynn, who is a senior export consultant. With a background in banking, Ian has over 11 years experience working with export letters of credit and now runs Synergy's export trade department in Spain. And then joining us is also Daniel Ellis. Daniel is a senior trade consultant based in Synergy's UK export department. Daniel has nearly 6 years experience in trade finance and working with letters of credit. Dan handles export letters of credit clients on a day-to-day basis. And last but not least, Luke Pinlin is a senior export consultant, also based in Synergy's UK export department. Luke joined the team nearly 4 years ago and has proven an invaluable asset to the team. As a friendly reminder, this session is being recorded so that we can share it with you later. And throughout the whole duration of the session, you can submit your questions via the Q&A function, and they will be addressed by the speakers after their presentations. Now, without further ado, I'll hand over to you, Ian. Thank you very much. Thank you both.
Good morning, everybody. Welcome to this presentation. Letters of credit, a means of payment into international trade. Y para la gente español está titulado Cartas de Crédito, un medio de pago en comercio internacional. La mayoría del discurso lo haré en inglés, pero si tienen una pregunta en español, podemos contestarlo después. So, without further ado, let's get into it and make a start. So then, how will this course help? Who's it for? Well, maybe you're an exporter, manufacturer of goods, and you use letters of credit on a regular basis, but you're thinking maybe you can sharpen up a little bit in how to use them and the best way to utilize them. Maybe perhaps you're an exporter or a seller. You've heard of letters of credit, but you've never used one before. Well, this is an ideal opportunity to learn how to deal with them. Or maybe you're looking to open new markets for sales, and an export letter of credit is an ideal way to do that, because, as we'll see, it gives you security of payment when perhaps the buyer or the country is not somewhere that you're so sure of selling to. So then, as we can see, we've got the agenda here. So we're going to just talk through that slightly. So we're going to start by talking about methods of payment in international trade and just seeing where a letter of credit sits amongst the levels of security that we've got when we're selling, when we're exporting. We'll talk about what actually is an LC and how it's beneficial, why we can rely on them. We'll talk about who's who and what do they do, because in a letter of credit, the different parties, for example, the seller and the buyer, have different names to what you might be used to. So we're just going to break that down. And then my colleague Luke is going to take us through an example of a letter of credit, so we can actually see what it looks like for those that have not seen one before. And then we'll talk a little bit about the presentation that we have to make under the letter of credit, why we have to focus on that, and what can arise as we see their discrepancies. So something to deal with as well. Then my colleague Dan is going to take us through the do's and don'ts of an LC, a letter of credit, and just give us a bit of an overview of that. Then we finishing off, we've got what we call the order of action. So it gives a little bit of a timeline of the LC, so we can see from the start of the process all the way through to when it finishes. And then we'll finish with some questions and answers where we can go over any doubts. So then we'll make a start then, talking about methods of payment in international trade. So as we can see, we've got on the screen there, this is obviously from an exporter, seller, or manufacturer point of view. So we talk about, from the left, we've got the most payment security, moving over to the right in the least payment security. So obviously, if we're shipping goods, the most payment security we can possibly have is that we receive an order and we receive full payment for that order before we've even done anything, which is obviously wonderful if you can get it. But in this day and age, really, it's not so common that people will trust one another to give full payment up front without any part of the exporter. So then moving on to just to the left there, we see that a letter of credit is the second most secure method of shipping. So why do we say that? Well, if you have a letter of credit, you've received it, you've checked the terms, and you know that you can comply with those terms. The goods description is correct, the dates are okay to work with, various other terms, the origin of the goods, for example, things like that. We can present under that letter of credit, and we know that we will be paid. So that's something. So then the customer, if they step back and change their mind, well, it's too late, because you've got a letter of credit. So you can be sure that you can ship the goods, comply with the presentation. Your presentation will comply the LC, and you will be paid. The bank is obligated to pay you. The only thing to add to that is that you would want to trust the bank that's involved there. So that's something we'll come on to further in the presentation, something called confirmation. The next most secure method, as we see there, is a documentary collection. So documentary collection is a bit like a letter of credit, but it's somewhat lacking in certain areas. The bank is not obligated to pay under a documentary collection. So you'll ship goods, you'll make a presentation to a bank, and the bank will contact your customer and say, we received these documents, do you wish to pay? But the bank are not obligated to pay. So it still depends on your customer to effect payment. So it gives you some security in the sense that you're presenting the documents to the bank, not to the customer. So the customer can't immediately clear the goods using those documents, but the bank are not obligated to pay. So if the customer has a change of heart, and then there's nothing you can do. So it's not as secure as a letter of credit, but it carries it can be helpful. And then obviously the last one is the open account, where it is the least payment security, where you ship the goods and simply wait for the customer to pay you. So many people these days wouldn't be confident to do that, because you obviously have a lot of money on the line. The trade could be 100,000, million, something like that, and you've shipped your goods, and you just have to rely on the customer for payment. So obviously that's not very secure at all. So those are the different methods of payment in international trade, and so we can see where the letter of credit sits within that. Okay, so moving on then. What is an LC? Well, the International Chamber of Commerce describes an LC as the lifeblood of international trade. And we can see why, having just looked at the methods of payment, we can see why that's the case, because obviously it really helps international trade to happen. Many people wouldn't be prepared to ship without a letter of credit in many instances. Then underneath, we've just got the Oxford English Dictionary description, which is, as it says, a letter issued by a bank to another bank, especially one in a different country, to serve as a guarantee for payments made to a specified person under specified conditions. So perhaps as someone who works with letters of credit every day, I would perhaps add that it's a financial instrument. It's more than a letter, it's a financial instrument. And as it says, it serves as a guarantee for payments, provided you comply with the terms. And again, provided you trust the bank involved, which we'll come to. Okay, so moving on then to the next slide. How is an LC beneficial? Well, as we touched on, you're not reliant on the customer for payment. So you receive a letter of credit, you're sure that you can comply with the terms, you've checked them. If you're not so sure about how to do that, then obviously consulting a specialist, perhaps a bank or trade finance houses like ourselves, can check the terms for you and ensure that you can comply with that letter of credit. Then your customer falls out of the picture there, really. Why? Because an LC is irrevocable, so it can't be revoked. They can't take it back after they've issued it until it expires at a certain date. So they can't change their mind, or if they go bust, or if they find that they can source the goods somewhere else at a cheaper price, well, it's too late. So you can ship, and you can, and complying with the LC terms, you will be paid by the bank because the bank are obligated to pay you. So that's something really beneficial, isn't it? So then after that, we talk about opening up market opportunities. So it makes payments secure for unknown countries or buyers. So as we just discussed, it really is not relevant where the customer is or if they change their mind, because you've got a letter of credit. If you're secure that you can comply with it, then you know you'll be paid. So then that opens up market opportunities in countries where perhaps you wouldn't feel so confident normally. So that's a real benefit, isn't it? So then it says makes it possible to offer extended payment terms to buyers. So that's because an LC can be issued in different timelines of payment. So we have something called at site, which means that when you have a letter of credit that's at site, you make a presentation under the letter of credit, having shipped your goods, and you will be paid straight away by the bank within a few days usually. But also you can have 90 days, 120 days, even more, sometimes a year or more, which gives the customer in the other country a little bit of breathing room, because they're not obliged to pay straight away. But as the exporter, you can draw the presentation down and receive payment straight away. So it works well for both parties, because the bank's kind of in the middle, paying on the one side immediately, but they're not necessarily drawing it down against your customer straight away. So that's a real benefit for both parties as well. And then finally, it says it can be borrowed against. So again, if you have a letter of credit that you're sure you can comply with, perhaps you're someone who doesn't have significant capital to raise the funds to either manufacture or purchase the goods from a supplier, well, you can borrow against that letter of credit. And there's various banks that offer that service, or again, trade finance houses like ourselves. So that's another benefit of a letter of credit. So then, moving on to the next slide. As we talked about, within an LC, you've got different names for the parties that perhaps we might be used to. So this, as it says here, with the seller or the exporter, or you might say the manufacturer, in an LC, they're termed the beneficiary. So they'll come up in the field under beneficiary in the LC. So if that was yourselves, for example, then as a company based in UK or Spain, for example, then you would be listed as the beneficiary in the LC. Why? Because you receive the letter of credit, you benefit from it. The buyer or the importer is known as the applicant. So that's the foreign buyer in the other country. They're known as the applicant. Why? Because they apply for the letter of credit. So those are terms that we should get used to using: beneficiary, seller, applicant, buyer. The bank that issues the LC is fairly straightforward. It's called the issuing bank of the letter of credit. And then underneath we have the receiving bank that passes the LC onto the beneficiary, is known as the advising bank. So they advise the LC to the beneficiary. So they're usually based in the local country, in UK or Spain. They will advise the LC to the beneficiary and tell them that it's authenticated, that it's a verified document, but they won't do anything more. However, underneath that, we say receiving bank that also adds an undertaking to pay. So it's the same bank, but they can add what we call their confirmation to the letter of credit. And then in doing so, they then become the confirming bank. It's just another name for them. It's the same bank, but it's just another name for them. So the confirming bank. So what's the benefit then of having a confirmed LC? Well, as we touched on before, if you have a letter of credit that you're sure you can comply with, you can ship the goods, you can present your documents to the bank, and that bank will have to pay you. They'll be obligated to pay. However, that bank may be a bank in another country, ABCD bank in the other side of the world that you've never heard of. And perhaps you've got £1 million in this trade. So your assurance of payment is coming from a bank that you've never heard of. So many customers, when they receive the letter of credit in their local country and the local bank, they will be keen to get what we call confirmation. So that local bank will add their confirmation to the letter of credit, and they add an undertaking to pay that says that if the other bank in the foreign country doesn't pay for whatever reason, or they can't pay, maybe there's a financial problem with that country, for example, or sanctions or something like that, then they will have to pay. So that gives an added assurance to a lot of exporters, especially these days with different problems around the world. So those are who's who and what do they do in the LC. So then moving on, we have just a little diagram outlines the main parties and roughly how the LC works. So we've got at the top the sale contract there, which is obviously between the seller and the buyer. So they make the contract at the start. And then on the left, down the bottom there, we can see LC opening request. So more or less at the same point when you sign the contract, if the payment of the transaction is to be by LC, then you would want, as the seller, you would want the buyer to be speaking to their issuing bank, drawing up a draft of the letter of credit and sending that to you so that you've got an idea of what you're going to have to comply with. And at that point, obviously, you can make any change, you can request any changes to the letter of credit so that the buyer makes those changes prior to issuance, which is much easier than once they've issued the letter of credit. But then once that's taken place, then there's two ways that the issuing bank can send the LC. As we see, you can go directly to the seller. So the foreign bank in the other country can send it directly to yourselves as the exporter, or much more common, they send it to a UK or Spanish bank, local bank to the seller, who will then advise, as we discussed, the letter of credit onto you to say this is an authenticated document that we've received from such and such bank overseas. And obviously, if you want them to, then they can confirm that letter of credit as well, which gives you the assurance. So then having done that, having arranged the contract, received the workable LC, then as we can see, the fifth stage is delivery of goods. So then you will have a date in the LC by which you have to ship the goods, and that will be what you then work towards, shipping the goods and making a presentation. Okay, so now my colleague Luke is just going to talk us through a little bit of show us what an LC looks like, so that if we haven't seen one before. So over to you, Luke.
Thank you very much, Ian. As Ian mentioned, I'm going to quickly run through an example of letter of credit, what it looks like, and I'm going to highlight some of the clauses that we would encourage you to focus on when you do receive the original letter of credit. Starting on the left-hand side, you can see the cover letter that's been received by the advising bank. There's two particular notations on the cover letter that we'd encourage you to focus on. That being, we advise having received the captioned documentary letter of credit in your favour. As earlier mentioned by Ian, part of the role of the advising bank is to validate the actual authenticity of the letter of credit, so that you know that it's genuine, you know that it's been issued in the correct manner, and it is a letter of credit. Further to this, you can also see the engagement or the commitment of the advising bank, and they've stated that we have not added our confirmation to this letter of credit. So therefore, as Ian mentioned before, the advising bank will check the documentation, but the documentation will need to go to the issuing bank to be checked again before payment is effected. Moving on to the right-hand side, you can see the SWIFT fields, which makes up the body of the letter of credit, and you really need to be paying attention to some of these details. As you can see, field 50 outlines the applicant field. This is, as Ian mentioned, the import of the goods and the party that applied for the letter of credit, followed by field 59, which is the beneficiary field. Again, this is the exporter, and I would ensure that all the details, your company name, your address, all coincide with what's shown in field 50. Field 32 outlines the value of the letter of credit. Again, this is another essential field within the letter of credit itself, as you need to ensure that when you ship the goods, this is the value that you are expecting to receive as payment. Moving on to the next slide, you'll see that field 43P shows that parcel shipments are allowed. This again is another important clause. As you're allowed to, as in this LC it is allowed, you're allowed to make multiple drawings and multiple shipments under the letter of credit itself. Again, this is something you really need to think about, especially when you're deciding as to whether or not your goods will fit into one container, because ultimately you don't have a lot of choice when it comes to freight these days. And when your goods get down to the port, if they are loaded onto two separate vessels, that will be classed as parcel shipment. And if it's not allowed, then you will be discrepant. And my colleague will touch on that in a minute. Moving slightly down, you can see that 44E specifies what ports you're allowed to ship from. Again, it's really important that these aspects of the LC are as per your contractual agreement with your customer, but also that you can comply with these clauses. Another essential clause within this LC is 44C, the latest date of shipment. Again, if you're manufacturing the equipment or you're sourcing the equipment elsewhere, you need to be mindful of the fact that the latest date that you can ship the goods in this instance is the 30th of April 2025. This is definitely more applicable to those that are, again, manufacturing the equipment, because you need to be able to ship the goods before this date. And if you don't, you will be discrepant, and payment will unfortunately only be affected at the discretion of your customer. In 45A, you can see a small description of the goods, but below that are the Incoterms for this letter of credit. And it is very important to kind of familiarize yourself with the Incoterms and really understand what your obligation is under the LC. CFR Hamad Port, which means costs and freight. But again, it's important to recognize and understand what your responsibilities are as to where the risk passes over from yourselves as the exporter over to the importer. 46A then further outlines the documents that are required within the LC itself, and these need to be presented to the advising bank for check-in and then for payment. You can see that the invoice is required to be certified, and these are things that you need to plan in order to kind of meet the presentation period, which I'll touch on in a moment, and to of course be compliant with the terms of the LC. It further states you need a bill of lading, a certificate of origin, and a packing list as part of the presentation. 47A further highlights additional information that's required within the documents themselves. As you'll see, it states that all documents must show the LC number, the bill of lading must be issued by a freight forwarder is not acceptable, and all documents must show the contract number. Again, these are essential pieces of information that must be required on the documentation, and not doing so will render your presentation discrepant. Last piece of information that I would like to touch on that's really important is the presentation period, field 48 on the right-hand side. This is the number of days after shipment that you are allowed, that you must present the documents within. Again, it's really important to ensure that you've done all of the aspects with regards to receiving the bill of lading, putting the correct information on the documentation, and presenting these documents to the advising bank within that 21-day period. Again, not doing so will render the presentation discrepant. Lastly, field 49 is the permission from the issuing bank for the advising bank to confirm the letter of credit. Ironically, as you saw from the lodgement letter of the LC, in this instance, the advising bank has chosen not to add their confirmation for reasons. It could be a many of reasons, to be honest with you, but yeah, they've decided not to in this instance. But thank you.
All right, thanks, Luke, very much for that, helping us to see what the terms are in an LC and just give us an idea of what we're working with. So then moving on to the next slide then. So we talked about the presentation that we've got to do under the letter of credit. So as it says, following shipment, you will make a presentation of shipping documents to the bank. And as we saw, there was 4 documents, wasn't there, in this particular LC: an invoice, a bill of lading, a certificate of origin, and a packing list. And those documents must comply with the LC terms and be consistent with one another as well to be accepted as clean. So it says that if the documents are not clean but discrepant, then you will have a short time, the presentation period, to make changes. So as we saw in the LC just now, the presentation period of that LC was 21 days. So you've got 21 days to make a presentation to the bank and for it to be clean. So that may sound, that's 3 weeks, isn't it? So that may sound like a while, but you can only present after shipment. You've got documents that you're not issuing. So some of them are issued by the shipping line, the bill of lading. Certificate of origin is issued by the Chamber of Commerce. You've got to get them together from the different places, and you've got to present them to the bank, and the bank have got to check those documents. So really, you want to be doing that within 4 or 5 days, ideally. That's what we try to achieve ourselves, to give the bank a good amount of time to then check the documents. And if there's a what we call a discrepancy, if they pick up some issue, perhaps maybe there's a typo somewhere, there's a weight on the packing list is different to what it says on the invoice or the certificate of origin. Origin of goods is stated as one country when it should be another. Those type of discrepancies, easily made, very easily made. But if you present quickly to the bank after presentation, you give yourself time for the bank to check the documents, for you to go back and make those changes and re-present to them. And then, as we said, once you have a clean presentation, that bank is obligated to pay you, especially if it's the confirming bank. If there's no confirmation of the LC in this instance, then also the issuing bank will have to check the documents. So you can see that 21 days suddenly looks quite short. So you need to be really sharp to be able to complete that process. And then, as it says finally, if documents are still not clean at the end of the presentation period, your customer will have to accept the discrepant documents for the payment to be released. So your security of payment, which was the entire purpose of the LC in the first place, falls away if you don't make a clean presentation to the bank. If your documents are discrepant, then the bank will contact your customer and say, we received these documents related to X shipment. Is that, are you happy to accept them, and do you want to pay? So obviously we touched on at the start that was one of the reasons in the first place that we wanted the letter of credit, was for them to not have that option. So it's really important that we make a clean presentation under a letter of credit. And if that's something that's challenging, which it will be, because, for example, it's estimated that 60 to 80% of first presentations under letters of credit are discrepant. 60 to 80%. So that's a lot of discrepancies that are being picked up in documents. So you can see how easy it is to make a mistake in the documents. So then obviously if that's something that's a challenge, then it's important to consult a specialist to help you through that process. So if we move on to the next slide, my colleague Daniel is going to just take us through some do's and don'ts of a letter of credit, just to help us to get an idea of how to work with them. So over to you, Dan.
Thank you, Ian. Yes, I'm Daniel, and I'm just going to talk about a few aspects that you need to consider and the key do's and don'ts related to an LC process. So the first point on this slide is to eliminate risk by being sure about everything. So whilst an LC is a key financial instrument and provides you with a very strong payment security, there are risks throughout the process that need to be considered, such as the LC needs to not only align with the contract documents that will already be agreed before the LC comes into place, but then the LC obviously also needs to include clauses which you can comply with, as Ian and Luke have touched on previously. It can be quite a challenging process, especially if you're new to LCs and you're not really sure about them. So that leads nicely onto the second point, where if you are unsure about aspects or you require expert assistance, there are many means of getting that assistance, be it through banks, chambers of commerce, trade finance and consultancy services such as ourselves, or organisations like UK Export Finance if you're an exporter here in the UK. So I would strongly recommend, if you are unsure or you're working with an LC for the first time, there are so many opportunities and organisations and people out there that can assist you and give you that guidance. The third point, which I would strongly recommend you as the exporter, the beneficiary of the LC, would be to send the buyer a template of the letter of credit terms that you require. So just send them some aspects of the LC which try and dictate the terms of the LC into your favour to ensure that you can comply with the terms and ultimately get paid and ship the goods in the fastest manner. Following you sending that template, I would always insist upon getting a draft of the letter of credit before issuance. That's a key aspect and a vital thing to consider. It's so much easier to make any changes to letters of credit whilst it's at draft stage and before its issuance than after it's been issued. Trying to make changes after issuance, it's much more of a convoluted process. There's costs associated with it as now the banks are involved. So an amendment to the LC would need to follow the same routing, issuing bank to the advising bank, and then subsequently onto the beneficiary. Whereas with the draft LC, it hasn't been issued yet, so it's still just dialogue between you and your customer. And then finally, once the LC is issued and you've received the advised LC from the bank, from the advising bank, I would examine it line by line, as Luke went through earlier, to ensure that it meets the terms that you've already specified in the template and you've seen in the draft, and it's what you would expect to see. That's like the final assessment prior to proceeding with production of goods, and then if you're looking to procure from elsewhere, I would always only proceed with production and procurement at that point once you've got the advised LC in your hands, you're happy with the terms, and you can comply with it. Now moving on to the don'ts, the next slide. Do not leave anything to chance. As we've seen, there's lots of aspects that you need to consider. I would not leave anything that you're unsure of, or try and rush through the process. As the next point said, I wouldn't try and rush through the process. Sometimes your customer may be saying, I need these goods as soon as possible. But I would always strongly suggest not rushing through the process, going through it stage by stage, as we went through on the previous slide, to ensure that you are happy with it. We've seen instances where you rush through the process as your customer wants the goods, and it can lead you into a sticky situation, potentially being discrepant for the under the LC, as you may have missed something or failed to consider anything. And then the final point is, do not make any financial commitments, as I touched on earlier, with regards to payment of suppliers or procurement of goods or beginning production. Do not make any of those commitments until you've received a letter of credit from the advising or confirming bank that satisfies your requirements, and you're happy with it. And only at that point would I suggest giving the green light to produce the goods, ship the goods, and to proceed. Yeah. Thank you.
Okay, thanks, Dan. Much appreciated. So that's given us a good overview of what the do's and don'ts are when we're working with letters of credit. So finally, then we'll just look at, as we said, an order of actions, just a little timeline of an LC to give an idea of the working life of an LC from start to finish, so that we can work with them better. So the first stage, as it says there, is contract signed. So once you've agreed a trade with a customer, at the same stage, really 1 and 2 very close together, because you want to be receiving, if the payment's by letter of credit, you want to be receiving straight away a draft of the letter of credit so that you know what you're going to be working with and you can make any changes to the terms therein. The next stage 3, it says seller reviews terms and asks for any changes prior to issuance. So again, that's something really important, that we want to make sure that we're able to work with the terms in the LC, because if not, then it's just going to make it much more difficult. Stage 4, seller proceeds with, so on receipt of a workable LC, you've got a workable LC, and now, okay, let's proceed with production or procurement of the goods, depending on whether you're the manufacturer or not, because you know at that point you're okay to comply with a letter of credit. Stage 5 then, once the goods are ready, and you'll want to make sure that that's within the time frame that's allowed with the LC. So in the LC example that we saw, the latest shipment date I think was the 30th of April. So once your goods are ready, which you would want them to be ready in that case, maybe end of March latest, so that you've got a month after that, once the goods are ready, to then ship them, because the date that we talk about shipment by sea or air or road. So if it's by sea, the date that the vessel departs from the UK or Spain is the date that you need to consider. So the date in your LC, the 30th of April, you have your goods ready by the 31st of March, and then you arrange shipping of those goods. And when that vessel departs from the UK or Spanish port, that date is the date that you have to make sure is before the 30th. Same for air freight and road freight. They're quite substantially easier to work with in terms of, in that respect anyway, for meeting dates, because it's much quicker to arrange air freight or road freight. Sea freight is a lot more difficult to book and that type of thing. Vessel, you're at the mercy of the vessel as well. So, you want to give yourself a good bit of time for sea freight. So after shipment, once you've done that, then in stage 6, we finalize our shipping documents and we present them to the bank. So you've got your transport document from whichever method of shipment was affected under the LC, and then your other documents as well, as we saw: invoice, bill of lading, certificate of origin, packing list. And you prepare them, you check them all, word for word, number for number, and then you make your presentation to your local bank, the bank that advised or confirmed the LC. So then that bank checks the presentation in stage 7 and informs the seller, yourself, if the documents are clean. And if there's a discrepancy, then they'll let you know. They'll send you a refusal, and they'll outline line by line the discrepancy. So be it some typo on a document or anything like that, and you have an opportunity to change them. Those documents are then couriered to the issuing bank once they're finalized and once they're clean, for the issuing bank to also check them. So this is an important point that we talked about confirmation. So if you have a confirmed letter of credit, then that stage, that issuing bank check of the documents, you don't need to worry about that, because you've presented clean documents to a confirming bank which is obliged to pay. So that stage is not not so important for you. But if you haven't got a confirmed LC, then you also need to take into account the issuing bank's check of the documents. So it's very important there, and you can see the benefit of confirmation. Stage 9, the issuing bank checks the documents, and if the documents are clean, initiates the payment process. So payment might be at site straight away. So they say, okay, these documents are clean, payable, off we go. But if there's what we call a tenor or a usance, so maybe it's 90 days, 120 days after shipment, then they will nonetheless initiate that payment process. And when the time is due, then it will be time for them to pay, and they'll be obligated to do so. Then finally, in stage 10, the buyer receives a presentation and uses the documents within that to clear the goods. So the issuing bank will say to them, we've received these payments under the letter of credit, and the payment has been effected, and they'll send them to them, and the buyer can use those documents. The bills of lading, which is a document of title, they need that. It's like a key for a lock for them to open the container, if you like, and then they can use those documents to clear the goods. So that's it. So just an outline of the order of the timeline of an LC from start to finish, just to give you an idea of what the time scale is. Okay, so then finally, our last slide is simply any questions and answers. So over to Miriam. Perhaps you've picked up
Thank
some
you very
questions.
much, Ian. Yeah, thank you very much, Ian, Daniel, and Luke, for sharing your insights. So as Ian said, we will now open the floor to questions. So please feel free to submit your questions, any questions you may have, to the Q&A function, and I'll be reading them out loud, and they'll be explaining them a little bit. So for example, let's start with this one. So Lucia is asking, what are the biggest misconceptions about letters of credit among new exporters and importers?
Okay, that's a really good question. Thanks for the question, Lucia. Well, as we talked about at the start, perhaps people think most of our presentation has been from an exporter point of view, hasn't it? So from an exporter point of view, people think that it's a guarantee of payment. And it is a guarantee of payment, but you need to be sure of complying. You need to have what we talked about, a clean presentation, to be sure to comply with the terms. And then, yes, it's a guarantee of payment. But it's not simply a case of, I have a letter of credit, now I'm guaranteed payment. It doesn't work like that. Other perhaps misconceptions in terms of shipping dates, I would say, is a big one that we come across. Obviously, we work with them every day, so I'm trying to think of my own experience. Many customers will think that the goods are ready, like we talked about, the 30th of April was the latest shipment day. So the customer will get to 20th of April and say, okay, we're ready to go. And that by then it's too late, really. You need to be planning that stage at the end of your goods production. You need to leave a good amount of time for shipment as well. So yeah, they're probably some of the misconceptions that would spring to my mind, I would say. I don't know if Luke and Dan, you had anything to add to that?
No, yeah, I would just support you with regards to the fact that new exporters seem to believe that it as soon as you have that letter of credit in place, that it is a guarantee of payment, and forget to realise that you need to be able to comply with the actual terms of the LC in order to get paid.
Yeah, thanks. Yeah.
Okay.
So hopefully that's helpful. Hopefully that's helpful, Lucia.
Of course. And we have a second one. How does the letter of credit help reduce risks at the step number 4 when the seller proceeds with the production of goods?
Okay. Well, let's consider then, if you didn't have a letter of credit, you proceed with the production of goods. If you're the manufacturer, you're producing them undoubtedly at a cost, and you're incurring a cost. And if you don't have a letter of credit, then you don't have the guarantee, as we talked about, provided you can comply with the terms, that you'll be paid. Because the customer, while you're producing the goods, the customer in the other country changes their mind, or they disappear, or they go bust. Then what are you going to do with the goods? Perhaps you can sell them somewhere else. But many goods are bespoke, so they're made specifically for a place or for a certain customer. And so letter of credit, really, as we talked about, the buyer almost falls out of the picture. So you make a deal with a customer, and there's some customers you really trust, but there's many others that you don't even know them. So can you be sure that you're going to be able to trust them? Well, with a letter of credit, it doesn't really matter, because it's the bank. So you're thinking more of the bank than the customer. So you make a presentation under that letter of credit and it's clean. Doesn't matter whether the customer's disappeared off the face of the earth, because you'll still be paid.
Mm-hmm.
So
And
yeah.
about this, well, I guess it's as I'm thinking, but what would happen if the buyer or the applicant or the beneficiary don't pay or don't appear, or they just leave? So are you involved within that process, or you don't even notice that? I'm assuming it's the bank which issues the person, but are you involved in any way, anyhow?
Well, you'd probably be aware of it, because no doubt you'd be communicating with your customer at the time. But they may communicate to you some problems they're having. But nonetheless, the security of payment is not coming from them anymore. It's coming from a bank. So as long as you trust that bank, as we talked about, confirmation comes into play then it really doesn't matter what that customer thinks or changes their mind or anything else. Of course, in reality, there's other factors to consider as well. For example, when you're doing your documents, you might be tempted to only prepare the documents to comply with a letter of credit and not thinking at all about the customer. But in practice, every day, well, you want to keep your customer happy. So we prepare the documents both with one eye on the letter of credit and another eye on what the customer has requested. So many customers will want the documents, and increasingly, I have to say, they are more stringent on what they want to see in an invoice packing list. It's got to be exactly how they say, to keep them happy. So that's a factor. But technically speaking, you don't really have to worry about that. You're simply presenting to a bank to be paid. And that's
okay.
Yeah.
And my second question, I think you've talked about some issues that can happen during shipping the products. What happens if the shipment has any issue, like it is stopped import or whatever? If the fees rise within the process of exporting or importing to the country,
Mhm.
is this something assumed by the exporter? Is this something that can be included later? So, because I'm assuming the letter of credit can't change at that stage.
No, I mean, after a letter of credit is issued, the first thing to say is that after a letter of credit is issued, it can be changed, but only by the buyer. So only the buyer can change. It's what we call an amendment. And obviously they don't have to do that. So they may choose not to do that. You can request it, but they say no. For example, we often come across situation where the date is not long enough. So as we talked about, 30th of April, but you get into April, you realize you're not going to be ready. So you request the customer to change it, and you have to hope that they do, because so it's important, as we say at the outset, to make sure that you can comply with those terms. With regard to costs increasing and that type of thing, well, that is definitely a factor. Firstly, your Incoterms come into play there. So if you're we didn't talk much about Incoterms here today, but many customers will know what an Incoterm is. It dictates where in the journey of the shipment the seller's responsibility meets the buyer's responsibility. So you have Incoterms like Ex Works, FCA, which are the shipment is handed over and the responsibility ends usually in the country, the seller's country. Those are not really practical for a letter of credit, Why? Because, well, you're going to be presenting under the letter of credit a document showing the transport of those goods. So you want that to be in your control. So if you're shipping the goods and you're responsible for the freight, as we just discussed, which is ideal, then yes, those costs can change. Cost of shipping goes up and down almost monthly. So how do you do that? Well, within the contract at the start, when you're quoting for freight, you would want to leave a little margin there, a little allowance. So let's say the freight costs £5,000 at the moment. Then if your responsibility is to ship the goods within the letter of credit, then you would want to quote the customer with a margin on top. So if that goes up, you're covered. If not, then, and it is true that you have to occasionally take some the rough with the smooth, let's say, in that respect. But time and experience can help you to deal with that, because you know how much to quote, and you know how to deal with that scenario. But yeah, there's a bit of experience involved there. But as we discussed, obviously, experts can help you with that.
Mm-hmm. Okay, thank you very much. Well, I don't know if any of the attendees have any more questions. I think this was the last one. We also have one, I think we've already talked about this, but in case you want to add some more information about it, about what are the key factors that sellers should review before approving the letters of credit terms.
What are the key factors that a seller should review? Well, the LC terms, the LC that Luke showed us through, as he said, you want to go through line by line, and it's really true, because you need to make sure that every line in that LC is something you can comply with. Whilst an LC is an obligation for the bank to pay, the bank are not going to take that obligation lightly. So you need to make sure that you're complying with the letter of credit and complying with every term within that letter of credit. So the key factors perhaps you could stand out maybe is the LC terms need to be aligned with the contract. So the contract or the quotation, whatever document you've agreed against with your customer. But for example, the date, the latest shipment date is a big important point. Your presentation period, in our LC it was 21 days, but sometimes the buyer will want the documents to come through to them quicker. Well, they will always want that, to be honest, but sometimes they may try and force your hand and give you only 14 days to present the documents. Well, that's not much time, and so the presentation period is an important one. The description of goods, obviously, if it's quite technical, the goods that you're shipping. I have a customer that makes machines, and those machines have lots of reference numbers or part numbers, serial numbers, and then whatever's in that letter of credit, you're going to have to put on your invoice. So when you present the documents under the LC, those documents have got to comply with all the terms. So if there's a reference number or a serial number that's wrong, you have to put that on your invoice. So you want to make sure that it's correct at the start. So that's one. Origin of the goods as well. It always comes up that we might state that we might have goods that are of UK or of Spain origin, and then the LC says certificate of origin showing goods of USA origin, for example. So straight away you've got a problem, because you can't change the origin of the goods, can you? If they're manufactured in a certain place, then it's the LC that's got to change, not the goods. So stuff like that. But of course, there's many different factors to consider, but those are some of the main ones, perhaps.
Okay.
I just wanted to add to that and kind of reiterate why it's so important to go line by line. Is because when the bank is the issuing bank or the confirming bank, they're checking the documentation, they're going to be looking for reasons not to pay. And you need to make sure, as Ian said earlier in the presentation, that you're not one of the 60 to 80% where your first presentation is discrepant, because that can only lead to more and more problems and the risk of non-payment.
Yeah, thanks.
Okay. Okay, it makes sense. Completely makes sense. Well, thank you very much. So I think for the sake of time, Kim, we do need to be finishing up. But if you have any further questions, please, since you'll receive their contact details, please don't hesitate to reach them out directly. Thank you so much, Ian, Luke, and Daniel, for your expert vision, for explaining this so thoroughly. And thank you all for attending. I hope you find it both interesting and hopefully useful. If you end up hiring the services of Seniors in Trade after this webinar, they are offering all participants a 10% discount on their services. You will find more information in the follow-up email that you'll receive after the session with this presentation, their contact details, and everything else. Okay, so feel free to reach them directly. Later today, you'll receive this email. I'm sure they'll be more than happy to help you. That's all for today. Just reminding you that at the Spanish Chamber we have a very active events calendar and many interesting upcoming sessions. So please reach our website and see which any other webinars we have ahead. We have a new one, 11th of March, regarding global learning for international companies as well. So if this is of your interest, you can find all the information on our webpage. Thank you very much and have a nice day.
Thank you very
Thank
much.
you. Thanks.
Thank you very much.
Thank you, everybody.
Bye.
Bye. Thanks.